One other thing, Universal Life Insurance policy.
Mm-hmm.
Am I correct in thinking that if you take one of those out, which maybe you would advise against, but if you did have one of those, you need to look at it as it's strictly for passing on to your heirs, because the whole idea that you can, borrow out of the cash value and whatnot, it seems to me, just from what I've read, and I've actually got one that I'm thinking about whether I should keep it or close it out, is a bit of a joke in that if you borrow against it, you pay the insurance company back, right? Because you lose that time of investment earnings, and they're taking 4% or 5% for you borrowing your own money. So really, if you look at that, you have to look at it as a whole life policy. Forget any other bells and whistles, because it's not really worth it. And you could probably make more just investing on your own by maybe 2 or 3%.
You're 100% correct on that, Stephen. It shouldn't be considered an investment. And if you already have it and you want to pass it on to your heirs, that's probably the only good you're going to get out of it. But let me just caution you. This is one of those coachable moments that helps me help some other folks. Here's what oftentimes happens with those kinds of policies, and I've seen it I don't know how many times, countless times. But we get to where we have cash value, and the cash value. So now I'm 70 years old. And the cash value is contributing to the premiums or to the mortality charges that is coming out. So the cash value is supposedly going to produce enough dividends and interest to pay sometimes they're set up as a point of being paid up where you no longer have to put any money into it if you don't want to, and gets to the point where it's paying some of that mortality charge. I don't want to ever see a policy get to the point of that, because what oftentimes happens is all of a sudden we're 80 years old and the mortality charge is huge and it's sucking dry the cash value until it's all gone. Then you get a bill to pay a $2,500 premium if you want to keep your death benefit. And most people don't do it. And the only one that wins in that is the insurance company. So I would watch it very carefully and be very careful of that as you get older. I wish I could elaborate on a little more, Stephen, right up against the break here. Thanks for the call, though. Great question.